Good afternoon, Scott Redler, T3Live. Welcome to today's recap, the Friday weekend. Recap, the end of the week recap. It's been a long week. We entered this week, a lot of things looked very bearish. Last week we started to see a lot of the rollover in the high beta names. We saw groups that have been beaten down, making new lows, and we came in not knowing what to expect. What's going to happen here? Are we going to break below 1101 and pause at 1070 and then perhaps go sideways, get no more buyers and go down to 1020 to 1040? Or are we going to do a breakdown failure, trap some shorts, get some people out of their lungs, and just do some kind of reversal day like we saw last year, before we had a nice fourth quarter rally? So the week started. Monday we broke the range. Tuesday was the day to take notice. Tuesday was the day we broke really below the range but closed strong. And then that was the day to switch your short-term direction. Now we've had about 5 to 6 of these changes, since we put the low in on August 8th, and I want to show you what I'm talking about right here. So if you take a look at the chart, just real quickly, just to show you on a macro level, I know guys say it's hard to time the market, but again, this year we had this huge macro topping pattern. Okay, it took about 6-7 months to put in place, and when we broke, we talked about it. At 1250 was an area to get out of stocks if you were holding it longer term. And this is actually where IBD said to sell or market correction at 1300. So if you were looking at the technicals of the market and trying to learn how to maneuver actively, you could have saved yourself a big percentage move lower. Now, here at T3Live, what we really want to educate you guys on is how to actively manage short-term positions, some mid-term positions, and even just an approach for the long term. It's 2011, and we were at 1170 today on the S&P. We were there in 1998, we were there in 2002, we were there in 2006, and we're there right now. So if we've crossed this barrier probably 10 plus times, I don't know the exact amount, you've been nowhere if you've just sat there. But if you've maneuvered your portfolio and you've actively managed your positions, and when the market composure is strong, you're getting long a bit more than a tier 1 or a tier 2, or where we go into a market correction like we saw at 1250, and you lined up on some longs and maybe even got the cash, or you sold some in the money calls. It all depends on your strategy. You're maneuvering well, because there's been huge moves in this market both ways, and there's a lot of winners that have made historic highs in the course of the past 3 months, that if you saw the relative strength and you were watching the leading groups, you could have been in the right stocks instead of parked in the wrong stocks. So that's the main purpose here for the active investor. But then you also have a lot of pros on this site that shorten their time horizons, trade intraday, look for cash flow, and also maybe have more of a midterm strategy, maybe even if it's 1 to 3 days. And now I want to show you this lower end of the range, where if you take a look here, you'll see, and I'll actually magnify it a little bit more for you. This range started in August. So you had your low here on August 9th. From 1101, it went back to just say 1200. That's about a 7 to 9% move, just say. I'm not going to do it, to the T. One move of 7 to 9% came down about 5%. And then from this low of 1120, it went as high as just say 1230. So what percentage is that? It's probably another 7 to 9%. This range was a little less. This dropped about 5-6%. This dropped, from here, bounced 4%. From here, these are all in like 5 to 7 day time span. Then from here of 1195, you went down to 1075, around 8 to 9%. And then from the low here, you just had 1074 to about 1170, which was about 7 or 8%. So what I just stated there, in about 6-7 different moves, even if you just wanted to catch the up move, just say so you put it down to 5 moves. There were 5 moves of over 4 to probably 8% over the course of the past 2 months, and people try and make that in a year. So if you actively trade, there are ways using the right chart patterns to get involved and make them on a 1 to 3 day time period, or maybe 1 to 5, depending on how you do it, and also from the downside. So if you look at this most recent one, this is the low that we put in on Tuesday. If you take a look at the chart, you'll see this is a pattern we always talk about, the reversal day, the day to take notice, the red dog reversal, so to speak. And it was so clean. Okay, it traded below this range, got people out of their stock, came back above it. You could have bought 1098, or if we go to the, I'm not going to go to the spiders, just say you could have bought around 1100 with a stop at 1074 because you always want to have defined risk. We opened today at 1170, 70 handles. Okay, 6% if you trailed it. We never violated a recent low. The way you track it is you close here, and this is your stop. Okay, it didn't happen. Closed strong. Opened lower, didn't go below the previous low, so you didn't get stopped out. Opened actually higher, so this way it was a little different. I would say you probably should have got stopped out at today's high of 1165, and now you want to see digestion. So there's a lot of X's and O's in there that I'm not going to get into, but those who are on our site and have learned how to actively manage or trade for cash flow know that that's how you try and do it. So the question is, from now till the end of the year, what's going to happen? Was Tuesday the low of the year? And it's so stupid to call lows of the year or highs of the year. It's just like a way to make a headline. But you also what you want to know is if you had a composure change. And I think the fierceness of the rally that we had since Tuesday, obviously we were very oversold, is enough to say, okay, I'm not going to blindly short. I'm going to look for some longs that are holding up better. I'm going to see if we could get a follow-through day at some point next week. And I also want to see if we could hold higher and show commitment to the move. What's important about holding higher is that there are some people that missed this 4-day move and obviously say, I want to buy the dip. So you need to see where that dip is that they buy, and then you can measure it with retracement rules to see the commitment and the strength. So if you take a look at the chart here again, you will see we still have a series of lower highs in place. You have a high here of 1230. This is 1220. This one is, I think, 1195. And then today's high was 1171. So that's still bearish. Okay. You now have a potent down day low. What you want to see is not too much of this to be given back. I would say if we could start holding higher, I would say this is the area in my mind we'll have to hold in order to show me that momentum is going to stay here. So if we pull into here, hold higher, just say put in a higher low, then there's a chance at some point, maybe it's through earnings season, we break this downtrend and then we loosen ourselves up to then contend with the upper end of the range and continue higher into what could be a rally in the end of the year to 1250, 1300. If all of a sudden we come down to this low here of 1134 or 1140-ish and we don't hold it, and then you go to this last area of defense here for retracement rules around 1115 and we don't hold it, then I would say, okay, it was just another one of these 1, 2, 3, 4, 5 rallies you could have caught for cash flow and made yourself 2 to 7% to 8% depending on how many days you hold. And typically I play the first day and I get out the second and sometimes stick around for the third, but I rarely wait that long because I like to take a portion of the move and then move on. And that's how I make consistent money, and I don't look for the entire move because it's hard to catch that. You don't need to. So for next week, we're going to look to see if this level could hold once again. Now, I see a few things that we're going to have to watch next week because at the end of the day or in the afternoon, it was important that we held higher, but the financials gave a little bit too much back. And I know the financials have been very weak. They've been hard to trade or invest in for anything more than a day to 2 days. And I don't care, you're a day trader or an active trader. Okay, you hold on to these financials that keep making new lows, that violate retracement rules. But anyway, you look at something like the Goldman Sachs here. It definitely gave back a little bit too much. If you take a look at the macro picture of it, obviously it's just been getting crushed. So you did have a pivot low here, and now we were trying to figure out, someone else was in here, if this could hold. So if you take a look like this here, you had this big reversal day, and then in these 2 days were taken out by today. This is a little concerning. If we start to break below this 89, 88 in Goldman Sachs, I think then we're going to get pressured by these banks once again, and I guess rightly so after all the news that's coming out of Europe. I drew this line, which was your descending channel, which would be nice if we were able to finally break above and start a new trend. We talk about lows, higher high, lower high, lower high, lower high, bearish. So now you have your low. So what I'd like to see is hold here, make a higher low, and then break this trend, and I'll join this line. If you look at JP Morgan, so to speak, same type of thing. Not that great to see such a big down move. Okay, obviously we've had 3 days up in a row, and that's hard to come by with financials, but you don't want to see on the last day it just matched and taken away. You'd like to see maybe, half of it. But overall, if you look at the move from the low to here, it's still okay. But if we start breaking below 30 here, it's going to be trouble. Then it's the same trend. High, lower high, a little bit closer, but still another lower high. And this downtrend is still in place. So before getting too excited, you just have to realize a few things that could derail your thought process. Also, again, just to mention with Steve Jobs, our condolences go out to his family. The guy was unbelievable in any which way you could possibly imagine. But just to talk about Apple, Apple's been a little relatively weaker lately. And this could lead to somewhat of a problem. So I just want to talk about it real quick. Apple was a nice trade after it opened down on the announcement of Steve Jobs passing away. If you take a look, you'll see that was on this day. Okay, we opened lower. Okay, first, you remember we held the 200 day. This is the day that they came out with the iPhone 4S instead of the 5. Got hit hard, but reversed, held the 200 day the first time. This was where a lot of us got stopped out at 395. And then, it also, just to backtrack, it broke a bit of an uptrend that usually Apple doesn't break. So now you had to move to the 200 day. We came back up. It rallied into the 50 day, and it traded off. So if you traded that little quick move, which a lot of us did, I got out of it, and then I said, okay, we got to see what happens next. And now you have a bit of a downtrend here. Okay, so we closed in the lows today. Apple showed no relative strength. So the question is, do we start heading down here again? And if we do, psychologically, it's going to be a little tough for the tech sector to continue to show its relative strength. And if you look here in the Qs, you will see the tech sector is showing relative strength, considering that you saw the spiders make new lows, and this didn't make a new low, and it bounced back real quickly, and it actually took back the 50-day, and didn't rally into it. So Apple versus the Qs is showing relative weakness, which it usually doesn't do. So, and here also, you have a high, lower high, another lower high. So I'd like to see, 53 hold, and the worst case scenario, like 52 and a quarter, to show, a higher low, where here's your low, maybe we hold here, and so you come in, and then you go above there. But we'll cross that bridge when we get there. Retail is acting a bit better. The OAH is great, potent move, 3 days, and today, it's sort of paused, which is fine. So digestion over the next few days, I think, is going to be important. Holding higher is going to be important. Earnings season is going to come out and start, and we need to see that all these companies don't start bringing down their 2012 numbers significantly and the market not being able to absorb it. That would be a negative for the constructive nature of what started on Tuesday. So there's some things to watch out for. All I'm saying now is I know a lot of guys on day 2 started to get short, and they're like, oh, we're going to make new lows no matter what. I wanted you to get that bearish, stubborn nature off the table and be a bit more flexible. When we broke 1250, I think a lot of guys were trying to be net short and rent the long, okay? Meaning try and stay short the whole move, but at oversold areas, try and buy for a cute little bounce. And then in 1100 to 1140, we talked about getting in a tier 1 macro long if you're a longer-term investor, and be prepared if we break down to 1020, 1040, get into tier 2, or if we hold, or we do a bear trap, which we did, and we start to get and act better, you get to a tier 2 into strength. So that's where you are there. But if you're actively trading and you're not looking out 3, 6, 9, 2, 3, 4, 5 years, now I think it's the time to be a little bit more neutral to positive, perhaps try and be long, more stocks and some multiple stocks, which we haven't done in a while, and then rent this short. Like today, we opened up at 1177, spiders are up 50, 60 cents on the 4th day. Great setup. A lot of guys made money on our trading floor. A lot of people who follow us on T3Live and the virtual trade floor, which you could subscribe for, got short saying, okay, I'm going to sell this into resistance 4th up day. And then we pulled back from 117.50 in the spiders down to almost 115.06. It's a $2.50 move lower, and it happened in the first 2 hours. So that's a good cash flow trade with a nice strategy. So you rented the short. And then some people would have bought back and say, listen, you know what, I didn't buy it, at 1100, 1120, 1150 looks okay. I didn't do that. I think that we have some more sideways action before I start committing to multiple positions and longer term positions, because lately it's been best to hold for 1 to 3 days and then figure it out. So with all that said, there's still structural problems everywhere. China, we're not sure if it's slowing. Earnings season, we're not sure what kind of guidance we're going to get. Europe, there's still headlines everywhere. Washington still is gross, in my opinion, the way they're interacting and not doing anything for the people that they represent. But I'm not going to get into all that. But that seems to be the new normal environment that we're in. We've been in this trading range in the market for 14 years or 13 years. So maybe we have another 2 to 4 to go. And then, we're in the same boat as Japan has been in. But there's also money to be made if you're actively managing your position. In this time period, we're coming into the fourth quarter, and usually they try and do some type of rally, and it has to start from somewhere, and Tuesday was day one. If we get a follow through in the next 3 to 5 sessions, perhaps it'll be that new fledgling rally, and then we could do more holding and more multiple positions than we've done over the course of the past 6 to 8 weeks, because as you saw on that chart, you had 5 to 6, 4 to 8% moves or more in such a time period, and you had to take your money and run if that's how you do it. So in closing, it's Friday, got to get home, I need to eat because I'm fasting tomorrow. If you do celebrate Yom Kippur, I hope you have an easy fast. If you don't, the weekend looks beautiful weather-wise. Go outside and enjoy yourself, because as we saw, with Steve Jobs, and cancer doesn't discriminate, and just life's too short. So live it while you can, and just know that if you're not happy where you are in life, you could always reinvent yourself. You could always make some little differences to put yourself and your family in a better spot. And I do think that watching this video and learning how to actively manage your financial future, you're taking a step in the right direction. Have a great weekend.